Welcome to Insights. I'm Eric. Thanks for joining us here today. We're going to take a look at the grain markets and silver this weekend here. I think they're important setups. We're going to talk about the evolution of the trade, look at how the three time frames are doing, how the energy builds are, and what the invisible hand is saying relative to the chatter that's going on out there. I know the chatter is focused on weather and how much rain and crop yields and the fundamentals, and all those are good shorter term, but there are other things that are going on, I think, that people aren't talking about. But then again, I'm not going to interject what my opinion is about that. I think we're just going to talk about what the invisible hand is doing, and we'll let that go. And it probably won't jive with everything that's going on out there in terms of the discussions on the internet, but that's how it is. I think you have to tune that stuff out and focus on what the invisible hand is doing, or the world's money flows are doing, because they're far more important than our own interpretations. So if you want to review the evolution of the trade, I would suggest doing that. It would help explain, goes through the discussion that we're taking place here right now, help you understand. Quick review: the primary trends have all been up around 10 months. That includes silver. You're going to see a lot of parallels between these markets. It's either by coincidence, or it's soybeans and silver tend to move in the same direction and same, even though silver is more related to gold, they often move together. So you're going to see the time counts and the returns relatively similar. They've been up just under 15 months and pretty decent returns. The energy builds are picking up, and we're going to talk about those in a second. All the daily trends are down as I point my cursor in a downward fashion. If you can pick up on that, but this may not be over. These are very early trends right here. Only a few of them are at their mean. Silver and soybeans are at the mean. They're blue, so they're above. So probably maybe the mean's about 7 days. In this case, probably about 6 or 7 days. But these can turn down and these can turn red and be bolded red. So this can continue on for several more weeks if possible, maybe at least another week. The weekly trends are still extended for most of them. Soybeans is the most. It's red and highlighted blue. So this daily downturn could infect the weekly and turn that down before the monthly turns back up. The monthlies are looking pretty decent. They've lost some of their extension, so they're kind of refreshing into this decline. And we're going to take a look at that in a second here. So that's the three time frames, and as we move into the daily, here's what they visually look like. And they're down. They're now longer shaded green. And soybeans is just like that too. Wheat is also down, and none of the unshaded regions. You can see how long previous unshaded regions are, so you have to be patient, and we're going to have to watch energy. And energy is what we're highlighting now, or we're talking about here. We're coming up on corn. Corn shows a big spike. This is a big drop in price, but then we have a big spike in DI. It's pulling up DI2. That's a lot of accumulation. Again, that's not enough to generate a signal, but it's enough to say the invisible hand is buying the decline. Question is how far can it go down? We'll take a look at that too, or we'll take a look at soybeans, and I can show you how to look at it for corn. But we are showing accumulation not only there, we're showing accumulation in soybeans. Soybeans is farther, it's more advanced, it's 70, and it's already pushing DI2 to 1. That's pretty high. Wheat is the laggard. It is also turning up. You can see the DI and DI2 arrows have been moving higher, and they are moving in a direction that shows accumulation. It's just less than both corn and soybeans. The Pro Index shows the internals of how the decline is working out. There's heavy retail selling. There's heavy retail participation, and they're buying the weather argument hook, line, and sinker. At least the short-term one. There's a lot of cards on the table here, and it's hard to. Nothing ever moves based on one variable. But there's a lot of retail selling. You can see that the public index is crashing between lows, whereas the Pro Index hasn't quite made that yet. Soybeans is showing the same thing. You have heavy public selling. You have probably even professional selling. It's drifting lower. There's just a lot more selling in soybeans, more aggressive selling. It's that aggressive selling that's causing DI to spike to 70. Again, that 70 is not necessarily a buy signal, so we have to be careful. And we'll talk about that further as we move down here and take a look at wheat first. Wheat's also declining. It's a lot of public selling. You can see the professionals are hanging in there more and buying into this decline, and that makes wheat interesting. And all these trends could be interesting once they move through their seasonal patterns. And again, we'll take a look at that when we're done. Here's silver. Silver also spiked like soybeans, and it's much more advanced than the other areas, very similar to corn too. This is the long frustration phase that we've been talking about, and the computer identified it as we had this energy build that was down here. And silver had an upward drift, but it really didn't go anywhere for quite some time. So that's basically what we have is the whole concept of frustration. People expecting price to jump the creek. It's difficult to jump the creek with a bearish energy build. Now that's relieving itself and moving higher, and I want to look at in the past when it's done so. It doesn't take too much from here to get this above and to pull to DI2 near zero or in that range. So we could only be looking at maybe a week, 2 weeks, 3 weeks away. So this is something that silver's further along. Soybeans could be in the same position. And we have to probably frame this within the seasonality trends. So let's take a look at the weekly trends, and I put a few of them here. Here's soybeans weekly. I talked about the daily turning down and infecting the weekly. It's still a possibility. These lines would have to go below zero temporarily and for a quick burst most likely. You can see we're not too far away from the dotted line, so it wouldn't take too much. It would take more selling than we have here, but it wouldn't take too much to pull the trends down. In silver, it's further along, but wouldn't take too much to bring us down here. This would reset the weekly and probably set up for a more durable triple alignment when the time comes. So the question is are we going to come down and infect these areas that we don't know? We'll have to wait. Can it do that, and what will it look like? The energy builds will continue to stay high, and it will pull up DI2 even higher. If that's the scenario that's taking place, DI2s will be dragged well off of the negative range, will most likely turn positive in soybeans. But don't be fooled, don't be early. Let that happen. You can see, we'll take a look at the soybeans. You can see by soybeans that the DI2 can actually go quite a bit higher. It's been above 60 and twice in the last 15 years, but it can get well above 40. So there's a lot of room here. It needs to go from here to here. This could take months to build energy, months of downward action, or at least downward testing. And we'll take a look at that in terms of where we can test. These are the red lines. These are inside the reversal tab. If you want to go in here and pull down SOYB, you're going to get, and I can do that, we're going to get the soybeans from the 3 time frames. I like to focus on the weekly and the monthly. And the weekly is going to look like this. Everything that's above price is a red. Everything below is green. So there's a lot of congestion in this area to come back down and to test. So if you're going to go and retest, and we're going to go back and retest or build this energy build much higher, there's a potential to retest this band in here easily because there's a lot of congestion in here. Same thing that would take place in silver, and silver's a little bit less noisy. If we're going to really pull up a very strong energy build, and it's probably less likely, but if you have a spike and you want to pull this up to the zero line, a strong energy build will test these lower areas. And there's a few here, and then there's many down in here. Those are all possibilities of which you could build a really strong energy build. It will reset the secondary trend, and probably set up a primary trend that's far more durable when we get to a triple or a composite trend within a primary trend. The composite trend's the summation of the daily, weekly, and monthly. And when that goes to triple up, it'll be far more durable when everything has far less extended cycles. If you reset the daily, you reset the weekly, and we can see by here the primary trends for all of these assets aren't very extended. Nothing's red, nothing's pushed. There's a lot more time. If a triple alignment comes after that, it'll be far more durable. There'll be a lot more energy involved. The time cycles and the price cycles will not be extended. So that's something that you have to keep an eye out for, and it's a possibility in the back of your head. Where could it fall? It will fall probably along the lines of seasonality. Again, we've talked about this, so I don't need to rehash this too much. The corn has seasonal weakness that probably gets its worst into July. That's possible where the energy build could continue to spike, and you could see a downturn in the weekly that would enter in July, maybe August. Soybeans worst is in August, and silver has a rough time at it within August itself after a jump up in July. These are historical patterns. Again, it helps to pinpoint. It's you like to buy silver either in June or in August before you get the fall rally, and the same thing goes within wheat. The rally time to buy would be more in June. I'd like to see the energy build recover or start to recover here as we get into July, and then we get into the strong period that's coming. We'd like to see the energy build into the midsummer for corn and soybeans. So we'll have to watch that. We'll talk about that when that comes. But that's really the setup for both the grain markets and the individual pieces within that. And silver, they show some tendencies to move together, but it is something that we're still in consolidation. We can dip into the weekly. We're going to watch energy. It's starting to move higher. Energy is not a buy signal. It just shows you that the world's smart money is buying into the decline. That's something that you stick in your pocket, and when the composite trend resets again, we're going to remember that, and we're going to go after the reset. How long is it going to take to get a reset? Are we going to turn the weekly down and then reset the weekly as well so that the composite trend reset is more durable or younger or a better reset? We'll have to wait and see. There really is no way to know that other than the fact that there's still plenty of energy to build into the decline. So you have to be careful that this can get hit as well. I would study the reversals not only for soybeans but for corn and even for silver. And we'll take a look here at silver, where silver can drop, which zones it can fall into the decline. There's a lot of support around 19 and 21 for the SLV ETF. So we'll be targeting and keeping an eye on that. If we go down into those ranges and energy spikes a lot and then the weekly turns down, silver's next buy entry point going into the fall will probably be one of the most aggressive ones we've seen in some time. Again, you can talk about this stuff in terms of narratives and say I'm bullish, I'm bearish all the time, but you can see by the way you study these markets that entry points are very specific and they're few and far between. You don't want to buy every dip in corn. You don't want to buy everything. You want to sell sometimes when everything gets super extended, which it just did recently across the grains market. But now we're still waiting for an entry point back in, and it has to do more with patience. There's numerous resets. There's a handful of resets or re-entries or escalations of the core back up to full exposure. There's only a handful of them that are actually viable and you want to be aggressive with. The rest are just you could say it's a lot of trading noise. I know that doesn't help because people want to feel like they need to do something all the time. Wow, you can't talk about what good is the matrix if it talks about stuff all the time and we don't follow it, but that's how it is. I could program the computer to ignore all that stuff because I really do, but I'd prefer people to understand the true nature of trends, these fractal trends. There's a lot of noisy information in them. I want you to be able to see them and say, well, that's not a good one because the weeklies are still really extended. And be patient. And you teach yourself to see what it's like to really be patient within a dynamic trend. There's really no more than a handful, I mean, two, three opportunities a year. If you're lucky, you sell some and then you buy a few. And then you ride them until the primary trend gets old right here or turns down. None of these primary trends are old and none of them have turned down yet. And if you think, oh, I can't buy and sell hold corn or soybeans or silver longer term, yeah, you're full of it. I mean, this stuff can stay up for 20 some months, which is 2 years. That's other than the belief that the stock market's going to go up for 10 years straight, which that's what's happening. It never goes down, and there's a lot of unusual things that are taking place, but eventually you'll get burned by it because it catches up with you. Things are buy and hold, but not forever. Everything needs to be bought and sold at some point, but not as much as people think. It's not every 2 days, it's not every 2 weeks, and it's usually not even every 2 months. You go month to month mostly, but opportunities are only a couple in a year, and we're probably backing up to a real buy opportunity within these markets real soon, probably by the summertime and probably before fall comes. And we'll talk about it when the time comes. If so, I don't want to drag this out forever. So if you guys have any questions about what we talked about, contact me directly. If not, then enjoy the rest of the weekend and try and tune out some of the chatter that takes place. And I find Twitter exceptionally good at chatter that's completely horseshit. So if you want to focus on horseshit and trade off of that, go there. If not, stay off of it for a while because people talk too much. They don't listen to the fractal nature of the trends, and they think that you buy and sell every 15 minutes because I'm a professional options trader and that's what I have to do. So I caution against that. It's a tough thing to do. So be careful, stay off, give yourself a peace of mind, focus on the matrix on a daily or weekly or a couple day basis. It doesn't have to be intense, and because these things move pretty slow, the only thing you want to look for is maybe some of these disconnects down in here, but nothing's showing up even there. In terms of the individual markets, just remain patient. So enjoy your weekend, and we'll talk to you guys real soon.